Somewhere in Switzerland, in a vault beneath a quiet street in Geneva or Zurich, there may still be money that belongs to people who were murdered over 80 years ago. Not a small amount. Not a forgotten savings account with a few hundred francs. We are talking about billions of dollars, gold, cash, securities, and jewelry stripped from Jewish families across Europe during the Holocaust, deposited into Swiss banks, and then quietly left there after the war ended and the owners never came home. For decades, the Swiss banking system maintained one of its most sacred traditions: silence. Account holders were protected by some of the strictest secrecy laws in the world. No names, no inquiries answered, no exceptions. It was a system designed to protect the wealthy from governments and criminals. But after World War II, it became something else entirely. It became the mechanism by which stolen wealth stayed stolen. And the banks collecting interest on those dormant accounts had every financial reason to keep asking no questions. The truth didn't surface for 50 years. And when it finally did, it shook one of the most respected financial systems on Earth to its foundation. This is a story about money, complicity, and the longest cover-up in modern financial history. During the Second World War, Switzerland maintained its official neutrality. Its banks stayed open. Its borders, for the most part, stayed intact. And while the rest of Europe burned, Swiss financial institutions accepted deposits from all sides of the conflict, including, crucially, from Nazi Germany and from the Jewish families desperately trying to protect their savings before the worst happened. When the war ended, the survivors came looking. They arrived at Swiss bank branches with partial account numbers and family memories, trying to reclaim what their parents and grandparents had hidden there. Many were turned away, told the accounts didn't exist, told that without a death certificate for someone murdered in a concentration camp, they had no legal claim. The banks kept the money. The vault that stayed closed. In the immediate aftermath of the war, the scale of the problem was already becoming visible to those paying attention. Jewish organizations began receiving reports from survivors across Europe, families who had sent money to Switzerland before the Nazi occupation, who had been told by parents and grandparents that the Swiss accounts were the safest hiding place in the world. Now those survivors were trying to access funds that, in many cases, represented everything their families had ever owned. The bank's response was consistent and cold. Without the original account documentation, without the precise account number, without proof of death for the account holder, access would not be granted. Given that millions of people had been killed in circumstances that generated no paperwork, this policy was, in practice, an almost total barrier. The Swiss Bankers Association conducted what it called a thorough internal search in 1962 and announced that dormant accounts belonging to Holocaust victims totaled roughly 9.5 million francs. A modest sum. A manageable figure. One that suggested the problem was essentially minor. That number was, to put it plainly, a fiction. And the truth was already buried in the ledgers of the banks themselves, waiting for someone with enough determination to find it. The boy who remembered the number. The investigation that eventually cracked this story open didn't begin in a government office or a law firm. It began, in many ways, with memory. Greta Beer was a Holocaust survivor living in New York. Her father, a successful businessman, had opened a Swiss bank account before the war. She remembered fragments, a bank name, partial details, the certainty her father had expressed that the money would be safe. After the war, she had tried to claim it. She had been turned away. Her story was not unique. Tens of thousands of survivors had experienced the same wall of institutional indifference. But by the mid-1990s, something had shifted. The World Jewish Congress, led by figures including Elon Steinberg, began systematically documenting survivor testimonies and building a legal and political case that could no longer be quietly dismissed. Then came the detail that changed everything. In 1996, a young security guard named Christoph Mailly was working a night shift at Union Bank of Switzerland in Zurich. He watched as employees fed old bank documents into a shredding machine documents that, under a recently passed Swiss law related to historical assets, were legally required to be preserved. He took some of them home. What he rescued from that shredder were ledgers and records connected to dormant accounts and real estate transactions dating back to the Nazi era. He handed them to a Jewish organization. Within days, the story was international news, and the Swiss banking establishment, which had maintained its carefully managed silence for 50 years, suddenly found itself standing in a spotlight it had spent decades avoiding. Neutral, in name only. As the pressure mounted, a fuller picture of Switzerland's wartime role began to emerge, and it was far more compromising than the country's carefully cultivated image of wartime neutrality suggested. Independent investigators began documenting the mechanics of what had actually happened. Swiss banks had not simply accepted deposits from Jewish families trying to protect their savings. They had also accepted gold from Nazi Germany, gold that, in significant quantities, had been melted down from assets confiscated from Jewish victims, including, according to some historical accounts, gold taken directly from concentration camp prisoners. Switzerland had been Nazi Germany's banker. It had provided foreign currency that allowed Germany to purchase war materials from neutral countries. It had processed transactions that helped sustain the German war economy for years longer than it might otherwise have continued. The word neutral had always implied passivity, a country simply standing aside while others fought. What the documents revealed was something more active. Switzerland had made financially lucrative choices that benefited the Nazi regime, and had then spent half a century cultivating a historical narrative that buried those choices under the language of humanitarian virtue. The reckoning, delayed by 5 decades, had finally arrived. In 1997, the Swiss Bankers Association, under enormous international pressure, facing the threat of sanctions from American state governments and the weight of a global media investigation, agreed to an independent audit. The Volcker Committee, led by former U.S. Federal Reserve Chairman Paul Volcker, spent 3 years conducting the most comprehensive examination of Swiss dormant accounts ever attempted. Hundreds of auditors went through the records of every major Swiss bank. What they found destroyed the 1962 figure of 9.5 million francs, beyond any possibility of rehabilitation. The committee identified over 54,000 accounts with probable or possible links to Holocaust victims. The total value, adjusted for decades of accumulated interest, ran into the hundreds of millions of dollars at minimum, with broader estimates of the full stolen wealth flowing through Switzerland during the war reaching into the billions. In 1998, under the threat of being shut out of American financial markets entirely, Swiss banks agreed to a $1.25 billion settlement with Holocaust survivors and their families. It was the largest settlement of its kind in history, but here is the part that lingers. The settlement came with no formal admission of wrongdoing. The banks paid. They did not confess. The Swiss government expressed regret without ever fully acknowledging what the regret was for. And the independent estimates of total looted wealth that passed through Switzerland during the war suggest that $1.25 billion, significant as it was, represented a fraction of what was